What's going on, apes and apettes? Welcome back to the channel. AMC is down 5.33%. They are still pinning us down under $23 per share. But look at this. Russell 2000 is the only major index that is up, and it's up 0.29%, and AMC is down 5.24%. Let me remind you, AMC is the largest holding of the Russell 2000, so this should not be happening. But it's happening. But the market makers do not want the stock to go over $23 per share, as well as the hedge funds don't. Why? Because they have a lot of money on the line here in the next 2 weeks or so. But bad news for them, the markets might start to look a little bit better over the next couple of weeks, as the markets have had time to price in a lot of negativity. And let me bring you guys back to the actual CNBC website. The NASDAQ is down 1.7%. We have been getting beaten into the ground. And really, you've only seen the Russell 2000 performing better than the NASDAQ, which is a surprise, not a surprise at the same time. And a lot of the Russell 2000 stocks have been going up recently. You know, not some of the ones we're invested in, some of the more, remote stocks that don't get a lot of attention. Those have been doing all right. But overall, the markets are getting beaten into the ground as far as the major indexes and where a lot of money is actually at. So investors, they're definitely pricing in a hawkish FOMC meeting. That's January 26th and the 27th. And that's going to be the next big catalyst. And then after that, all we have is earnings. And that's also going to be very important, is the bank earnings are on Friday, as well as the next couple of weeks. We will get hundreds of companies reporting every single week. So like I've said many times, and I'll give you guys a quick recap, is that these earnings are very important, because if essentially inflation is very high, stimulus is gone, and the Fed is also tightening down monetary policy, then the only thing that holds up the markets is earnings going up. And I just seen an article here on CNBC that profits rose nearly 50% for S&P 500 companies in 2021. So they're propped up on those valuations. If earnings come down, which they're going to in 2022, as people are going to have less money, disposable money, then you're going to see the markets take a massive hit. So that's going to reduce liquidity. But 2022 is just the year of liquidity sucking out of the markets. That's what this whole year is going to be. Fed runoff, no stimulus, less spending. You get the idea here. Hopefully you get the idea by now. So that's what we're looking at right now. The way that I look at this is I look at this and say, hey, I know liquidity is going to be drained in the second half of 2022, definitely by the back half of 2022. What do I want to see in the meantime? Do I want to see the markets go down? Do I want to see the markets go up? I don't think it really matters until the second half of 2022 and the end half of 2022. And I got asked a lot of questions about this on the live stream, but when is AMC going to make that next leg up? I still think end of January, if not mid-February. That's when I could see AMC going back to possibly $60 per share. That's just what I think. I don't have any calls on the line. So if you guys are asking those questions because you're playing options or something super risky, I simply wouldn't be doing that. I have one option that's down like 95% with AMC that I just held on to, a $35 next week call. So, keep all of this in mind. It really doesn't matter what happens on the day-to-day, and I think a lot of people realize that by now. But for those of you guys that don't, this is really an unwinnable trade for the hedge funds. This is ultimately going to come to fruition. Who knows when it is going to be, but we're seeing some encouraging signs right now. As far as the technical analysis, we have to break out above the 20-day simple moving average, like I say all the time, because market makers, hedge funds, they're pinning us down here under $23 per share. They don't want the stock to go up. It's very easy for them to naked short throughout the day in, strategic intervals, and then cover them much slowly in also strategic intervals, and to keep a stock pinned under a certain price, or at a certain price for that matter. So as far as the actual technicals are concerned, I don't see us breaking under $20 per share unless something significant happened with the underlying business of AMC. We would still have to move down about $1.54 to come to $20 per share. I simply don't think that's going to happen, but eventually we're going to break out above 23, and then you're going to get a glimpse of bullish momentum. Again, I know a lot of people have been waiting for this and they want to see some bullish activity. And I personally think that that is coming, and that happens over $23 per share. If we break out past the 20-day simple moving average, then you're looking at a lot of bullish activity that's potentially going to come back into the stock, as well as trading algorithms will start to buy the stock as well. We already see institutional and hedge fund investors that have been loading up on AMC as it is. We also know that insiders just bought a lot of shares as well. They have sold a lot, but they also just started buying again. And considering the hedge funds are buying AMC at a 10 times faster pace, from June to July, or July to August, or August to September, from essentially October to November, they bought at 10x the speed, and they continued at that rate of increasing their shares throughout December as well. And I will imagine it's going to be the same thing for January. Now, institutional owners own 172 million shares. And this is actually a good thing, the more institutional ownership you see, because these guys, they don't move their positions around all too much. So that will ultimately help to restrict the capital. And it just shows you guys that there is going to be an epic battle between the hedge funds that are long and that are short on the stock. We are also in the middle of that. But when it comes down to it, a lot of these hedge funds don't work together. A lot of them are adversaries, and they want to take capital from one to the other, and they're in this, some of them are in this for the same reasons we are, but a lot of them are not. And the ones that are not, as we do know, Citadel with their market maker as well as their hedge fund, they have direct control of over 40% of our orders, so they can do whatever they want, and they can naked short the stock, they can pin the stock, they can do that, but eventually it all comes crashing down. And I mean, I can't wait until Citadel IPOs, because I can't wait to short the shit out of that one. But that's on a side note. As far as the other data that you guys need to know, we're definitely looking at a bullish short interest at 19.2%, 98.54 million shares that are sold short. Actually, let me refresh that real quick so we do get the most up-to-date numbers. 19.18% and 98.46 million shares that are sold short. Cost to borrow is still lower, as we have not seen true volatility to the upside in quite a while. Share utilization pretty much the same at 76.38%. The days to cover at 2.5, which all of this other information is pretty much the same, but a 19% short interest is still incredibly high, and considering the short interest that is hidden on the option chain, it's not even close to what the actual short interest is. So keep that in mind. As far as the max pain, we're looking at $23 per share by Friday. So tomorrow, that would suggest some upside from here of about $1.50 per share. And last, but certainly not least, the option activity. We could set up to see a mega bounce if we do see a big increase to AMC's share value. Tomorrow, you'll see a lot of calls go into the money. And like I've said many times, with low days to expiration or even no days left to expiration, if these options start to go run into the money, these market makers, they have to hedge out an extreme amount of shares very fast. So it ultimately does help to move the stock up when you get these mega bounce type scenarios that are playing out. As far as January 21st, we're going to have the FOMC meeting, the end of that week of, well, no, this is actually Monday. Excuse me. This is Friday. I believe this is on Friday. Let me double check that. Yeah, so that's Friday. Okay. My apologies there. So this is actually good. So next week, we're not going to have anything really besides earnings. And if earnings are good, then we could definitely see this GAM squeeze start to take hold. And this is Friday of next week. It's not the week of the Fed meeting. So there's enough time where markets shouldn't get any more fearful than they already are now until that Fed meeting. Oh, so okay. We didn't mess that up for you guys. As far as the out of the money calls for that expiration, 600,000 in the money. Out of the money calls at 600,000, in the money calls at 98,603. So a substantial amount right there, and not even half the amount of puts for that expiration. So it's going to be key if we can get above $40 per share. by then, that's when you can see that run to crazy high prices, as we do have almost 63,000 calls that are for the $40 strike. So that's basically going to be all for this video. If you guys found value out of it, hit that like button for me and consider subscribing to the channel for your boy. Notifications have not been going out, so let me know if you guys have not been getting notifications down below in the comment section. If you have not turned on notifications, hit that bell, baby. Ring it for me. Appreciate you guys. Love you guys. I'll see you in the next one.